Hello, and welcome to this latest Renegade Investor Report with me, Graham Rowan. And today we're looking at the energy crisis. And I want to share an inconvenient truth with you about this energy crisis, including some really powerful and very controversial statements from a real expert in the sector, because I think we've got one of those situations where the tide of opinion and groupthink is taking us in a direction that could actually have some massive negative implications for many, many people, and that we actually need to get back to some sense of reality about the innovation and in practical terms, and they help people to invest in joint ventures with property developers. It was great to meet so many of them at the Property Investor Show recently, and if you're interested in getting involved in that either as an investor or a developer, you can learn more at propertyconnections.org. And also by monacoestate.com, which is all about helping people find their ideal home in Monaco, whether that's for lifestyle reasons, tax reasons, business reasons, or whatever. The team at monacoestate.com can handle that whole end-to-end process of you making Monaco your residence and your home. So thank you to them. But let's get stuck into the meat of this week's episode about the energy crisis. Now, it's obviously been in the news massively recently. You've heard about all the companies that have been going out of business. We've had an involvement in rescuing one of those companies ourselves. And it's been a really traumatic time. But I think, to be honest, if I can quote from a famous 1970s Bachman Turner Overdrive song, you ain't seen nothing yet. It could get a whole lot worse than this. So let's have a look at some of the effects and the cause. Probably one of the biggest shocks has been the wholesale gas prices, which has gone up as much as 1,000% in a year. And this is for all kinds of reasons to do with coming out the other side of the banana syndrome, coming out of having lots of pent-up demand as factories start going again, shops and hotels and everything start working again. But also it's a global phenomenon, and it means that we're competing now in a global market with some people and some countries, as we'll see, who will pay any price. So what we've now got is this weird pincer movement between uncapped, ever rising wholesale prices and capped retail consumer prices, with companies being trapped in the middle of that. And with only so much hedging available, they've started going to the wall in great numbers, and it really has shown a kind of fault line in that competitive energy sector. So we're actually going to be left with a small number of almost monopoly or oligopoly players in the market, which was never the intention, but the intentions of politicians don't always lead us in the right direction. So at the same time as gas prices have been going through the roof, we've also had a very cold summer, as you're well aware, a fairly crappy autumn as well so far. So the weather hasn't helped us. We haven't had enough wind, believe it or not, which seems incredible to those of us who visit or return to the British Isles. Apparently there's not been enough wind to drive all those wind farms. So, all these things add up to this perfect storm as to why the prices have been getting so high. But of course, we'd have allowed for that and made sensible plans to store some spare gas, wouldn't we? Well, not exactly. If you look at storage across Europe, guess who's at the bottom of the pile at the right-hand end of the chart there? Yes, that teeny little amount, I think it's about 2% is what we store in the UK. Look at Italy and Germany with over 100% of their needs for a period of time being stored. So it's good to know that we're outsmarted by the likes of Romania, the Czech Republic, and Hungary when it comes to this. And it's hard to avoid the conclusion that the overall integrated, holistic energy policy of Great Britain for the 21st century looks something like this. We were having a clear out at home recently. I found some candles in a sideboard. My initial reaction was to throw them out as something we'd never need. Candles a little bit longer because I'm not sure that we're going to get through this winter without them. So it is a damning indictment of successive governments because, of course, this is one of those classic things. It's a bit like housing policy. I think we've had something like 20 housing ministers in 20 years. So guess what? We ain't got much of an integrated housing policy. Energy goes beyond typical parliamentary timescales. You need a 25 or 50-year plan for how you're going to drive a country's energy. And how on earth do you get politicians to think in 25 or 50-year cycles? It is mission impossible, although they're all bandying around dates now, like 2035 and 2050, as if they had some kind of real meaning. I think one of the things we're going to see, especially as we head towards the COP26 climate, is more of these pseudo-scientific announcements about what's going to happen by certain dates. But of course, as with all things political, we need to look at what they do rather than what they say. And I suspect that may fall rather short. Just in case you hadn't noticed, we've talked about gas prices going up 1,000%, many suppliers out of business. The average energy bills are now predicted to rise to north of £2,000 next year. And for many people whose incomes are barely going up at all, and they're seeing much higher inflation in the shops than you would see in the much manipulated government figures, a big hike in energy bills is going to cause massive, and how desperate things get here as we come to what's predicted to be a cold winter with energy soaring. The energy intensive industries that, it started with carbon dioxide for meat packing, it's gone into cement, steel, all these things that use a lot of energy. They have said, look, hey, we're going to have to close down and just make everyone redundant if we have to. It's just not economic for us to pay these sort of amounts of money. We can't make anything. So they, I believe, have successfully lobbied Kwasi Kwarteng, the business secretary, and I think some sort of loan going to be made available to them rather than it looking like grants or subsidies. But they're obviously going to get some kind of government help, just like this American was allowed to stay in business to keep producing the carbon monoxide. So, of course, with all this crisis going on, this is the point in time at which our switched on, tuned in step with the people and the realpolitik government decides to announce a new green levy on consumer gas bills to help fund moving to low carbon heating. Great timing, lads. Couldn't have done it better there, could you? I mean, what were your PR people thinking? We talk about the optics of a situation. Well, I mean, talk about putting grief on top of pain and turning crises into dramas. I don't know. So this is going to add another couple of £100 to these, multi-1,000-pound bills. And of course, they now want us to, stop buying gas boilers for our central heating and start using these new heat pump things that cost a mere £10,000 instead of a couple of thousand. So just today, as I'm recording this, they've announced £5,000 grants. So that means it'll only cost you more than double what a gas boiler would cost. And I've also read some fairly dubious reports on the efficiency of these heat pumps. So yeah, we're all going to have to make changes. I'm not for one moment a climate change denier. What I am is a realist. And I just want to see that we've got some joined up thinking that's going into how we're going to get there, because it's going to involve massive changes, and it's going to involve things politicians don't like doing, which is A, as I've mentioned, making long-term plans beyond the next election, and B, giving people bad news. Now, they won't do this in the financial world. They won't tell you that we're broke. They'll just keep on using the magic money tree to keep kicking the can down the road. But when it comes to something as visible and measurable as the environment, they're going to have to start giving us the bad news. And no politician wants to do that. But even the government's backbenchers have railed at this new levy and the timing of it. They've come out and said there's actually a Tory net zero scrutiny group, would you believe? There's 40 MPs keeping an eye on the groupthink and the claims and some of the stupidity that's going on in Downing Street at the moment. And they're saying this plan, the levy, should be discounted and discarded immediately. We are rapidly approaching energy poverty in this country. This would only add to it. And that is a fact. You tend not to think about this, but people die in Great Britain because they don't have enough fuel. They have hypothermia and things in winter, and this obviously is only going to get worse and worse. So there are people choosing between eating and heating, and that is only going to be made worse by things like this. So great timing, guys. I don't know what you're thinking. Perhaps you're not thinking. So obviously in the middle of all this, what's become clear is we are still heavily dependent on fossil fuels. Renewables simply can't make up the difference. We're not there yet. The technology isn't reliable enough. China, which I believe last time I looked was down to 14 days of coal supplies at its power stations, and is one of the biggest polluters through having the most of these coal-fired power stations, that's easy for me to say, in use. They just said is by another 55 million tons. The coal price itself is up 300%, not quite as much as gas, but still substantial, especially if you'd managed to invest in some coal miners a year ago, you'd be sitting pretty now. But of course, they're also buying up natural gas to compensate for the lack of coal, and they will pay any amount of money for it, forcing the prices up. So we are now competing with Beijing for the gas that we haven't bothered storing and for the energy that we haven't been able to produce from our renewable sources. So as we head into the November COP26 climate change conference, which Britain is chairing, China's even increasing reliance on coal is not exactly sending the right message, but it's a factual message, and it's a message that I guess we have to take on board to some extent ourselves. This is not an overnight switch. No matter how much we all want to focus on ESG these days, there are some realities that we have to be able to discuss and agree on, and it's going to be a blended and a mixed energy source for some time to come. Russia, of course, has been sitting pretty through all this. They've continued to meet their existing contractual commitments, but they seem to have declined to just open the taps a little bit more and let some extra gas through the pipeline to take away these pricing pressures. What they've done is to use this to try and put pressure on European governments, particularly Germany, to Nord Stream, or let's build some, see this one coming a decade or two away. But as I say, politicians don't like doing long-term things, kick the can down the road, take the easy option. That's their default. So I suspect we have no choice but to agree to this pipeline, to get the extra supply, and to further increase our dependency on that nice Mr. Putin. It's only a few times that he sent people with nuclear weapons onto the streets of Britain to murder his political opponents. So there's no reason why we shouldn't trust him as a major source of our strategic energy supply, is there? Did I not get the memo on that? Can't remember. So the target and the cost. It has been, we have been through Maggie committed legally to net zero emissions by 2050, and a less well-known target is a 78% reduction by the middle of the next decade. That's only 14 years away. You count back 14 years, 2007, it's not that long ago. Okay, we had a crisis the year after, but it ain't that long to do a 78% reduction. That's going to need massive changes in how we all live and how we spend our money and how we drive around and what energy we have and whether we can go on holidays abroad. That is a big reduction. I would argue that 78% would be harder than the remaining 22%, but let's see what happens. So the Office for Budget Responsibility, that's one of those names, a bit like the Office for Tax Simplification that you think came straight out of sort of Tony Blair, George Orwell newspeak. The Office for Budget Irresponsibility believes that this is going to cost £1.4 trillion over the next 30 years. So how much international cooperation will we see on this? Do you remember that banana syndrome we talked about? How much international cooperation was there with the medicines that had to be distributed? That didn't go terribly well, did it? So we may have all the posturing at COP26 and all the great words and all the written commitments. What's actually going to happen on the ground over the next 15 years? That's the question. And of course, if it gets competitive, how much pain are we going to take, either in terms of lifestyle change or cost in taxation and levies and all the rest of it, if we don't see any evidence that the Chinas and the Russias, the Indias and the South Americas are doing anything like as much as we are to try and save the planet? Because if ever anything was a genuinely international issue, obviously it has to be this. But if they can't cooperate fully on something that is a global threat to life and limb, as we've just been through, what makes you think they're going to suddenly start cooperating on the climate? I'm sorry to be an old cynic, but it's just hard to see how that's going to change. I'm just not seeing any evidence of it. So the official party line now for everyone coming out of the I think more so than ever coming out the back end of the banana syndrome, has been environmental, social and governance issues. What's happened as a result of all that is that the amount of money invested in exploring for fossil fuels like oil and coal and gas has declined sharply because they've become the pariahs of the industry. It's like something that only bad companies and bad people do. And already we were struggling. 5 years ago, oil discoveries were at their lowest since the Second World War. And the trouble is that, it's all realizing, we're moving away from all this stuff now. We don't need it anymore. Well, we're discovering 12 billion barrels of oil a year. That might sound quite a lot. Trouble is, we're using 3 times as much. We're consuming 36 billion barrels of oil a year. So, you don't have to be much of a mathematician or an accountant to recognize that sooner or later it's going to run out. And what happens when things get scarce? Oh, the price goes up 1,000%. The US became a major in the last couple of years. And the problem is, these are not light switches. They may affect light switches, but you can't switch them on and off like a light switch. These are projects with a long duration, highly capital intensive startup. And once you shutter these mines and these shale operations, you can't just switch them back on again without a significant investment. So, this is not an overnight fix. And here's a look at the declining numbers in gas and oil exploration. The gas is the blue color, the oil is the turquoise, and this is in barrels of oil equivalent. I mean, it's not really, I'm not here to show you this in great detail. I just want you to see the trend line. Look at that. This is from the year 2010. So this is in the last decade. It's gone off a bit of a cliff. And as you can see, the forecast for where we are now is even lower than where we were back in 2019. So again, you can't reverse that trend very quickly, but we have done it too quickly. We've reacted too early to reducing our exploration for gas and oil, because we still need them far more than most people seem to realize. So we have this long-term trend over the last decade of declining investment. We have this very strong political narrative that ESG and green is good and fossil fuel is bad. And while there's no denying that in terms of the overall emissions effect, the practical reality is we simply aren't there yet in terms of the technology. So the oil price since World War II has been pretty volatile. I mean, we're not talking crypto volatility here, but it's been as high as 180. It's been as low as, well, negative. Was it last year or the year before? It went briefly negative. But of course, it's been on a tear since, as suddenly, gas has become rarer, and we've all got back to driving around again after banana syndrome. And now, in the last 12 months, it's rocketed up from less than $40 to more than $80. And that's meant that suddenly things like these shale operations are viable again. And certainly the Middle East, where I think the OPEC countries are still very much controlling supply, they are now back into positive territory. Their economies rely on prices, I think, north of $50 or $60 a barrel. So they're sitting pretty at the moment and probably realizing that they're actually in for an interesting few years, because the world has realized belatedly that we still need oil and we're still not ready to move on from it. So where's that price going to top out? Who knows? But certainly, as you can see, it's been on a real tear throughout the last 12 months. So the inconvenient truth is that even the International Energy Agency, which has been one of the key drivers of this new narrative and one of the key almost opponents on real, will continue at double that rate, between 2 and 4% per annum. So, again, we've got this growing usage, growing demand, shrinking investment in exploration, meaning shrinking supply. What's going to happen to prices when you have growing demand and shrinking supply? I think they're going to go up. And of course, what has to be recognized is that the transition to renewables and green energy itself actually demands fossil fuels and increases our use of fossil fuels in order to make the transition. So what's lacking here is realistic transition planning to these goals. I don't think anyone would dispute the goals, the importance of them, and in some ways 2050 seems far too far into the future to try and get all of this under control. But what we need is real experts in the business telling us how we get there and what the transition plan is. And if that's a short-term increase in fossil fuel supply to meet the long-term goal of getting rid of fossil fuels, then I, for one, would be all in favor of that. I want a realistic, workable plan, not a pie-in-the-sky politician's plan, which is what we seem to have at the moment. And of course, the investment world, which is obviously where I'm focused, has just, this is like some sort of wet dream for them. It's like every fund manager on the planet now is falling over themselves to show how green they are and to say we're not going to invest in anything that doesn't meet our ESG tick list. And so now we've got a massive increase from 22.8 trillion of funds going into ESG. And the estimates are it's going to be a third of all assets under management in just the next 4 years. So, everyone is piling into it. All the companies that receive this investment are falling over themselves to show their own ESG credentials. And it's becoming a really challenging job as an investor to understand and separate what I would call the green BS from the reality of what these companies are doing, how they're making the world a better place, and whether indeed, and this is where I really worry as a shareholder, do I want my board of directors focusing on all the ESG tick lists rather than on the core profitability of the business I'm investing in. This is a real dilemma. I'm not the only one, I think, who feels that way. I mean, Tariq Fancy, who was, formerly the chief investment officer for sustainable investing at BlackRock, one of the biggest fund managers in the world, he describes ESG as mainly marketing hype and disingenuous promises. Now, he was really at the heart of all this. He saw what these companies and what these fund managers were doing, and he's saying most of it is hype and bullshit. That's what he's saying. I'm tempted to agree with him. Bernard Sabrier runs a large Swiss fund manager called Unigestion, got over 22 billion in assets, and he's saying, when you mix doing good with potential profit, that is where the ethical frontier might be breached. It's an illusion for me to tell people, do good and you will make more money. There's an honest man. What he argues is you should make your money in business or investing or whatever, and then go into philanthropy to do good. But when you start trying to use the company and the business to do good as its primary purpose and role in life, you get into all kinds of conflicts that are going to make it a real challenge to make decisions. And really, a lot of this harks back to the legendary Milton Friedman. I have to quote from him, I'm sorry, but he said, a corporate executive has direct responsibility to conduct business in accordance with shareholder desires, i.e., to make as much money as possible while conforming to the basic rules of society, both those embodied in law and those embodied in ethical custom. So in other words, don't break the law, do no harm, but focus on making money. And yet when you now see company directors being burdened with having to do good for society as well as running a profitable business. And I don't know if you've ever run a business, but believe me, running a profitable business is one of the hardest, most demanding, most challenging things you can do. That's why 96% of businesses fail in their first 5 years. Running businesses is certainly not something that many prime ministers or presidents have ever done. Those that have a bit more empathy towards what's involved. But when I see business owners and even the Bank of England being told to put climate change at the heart of their agenda, I do worry that they're going to take their eye off the ball of actually running a profitable business. And for me as an investor and shareholder, that can only mean reduced returns, reduced dividends, reduced profits, and reduced share prices. So, how far they're going to go with that is key. And what you as an investor need to be on top of is what's happening to your portfolio in the name of the ESG narrative. And is that something you're comfortable with, or do you need to make some changes in your portfolio to companies that are focused on old-fashioned ideas like profit and looking after their shareholders? Now, one of the inconvenient truths that we need to come to terms with is that there can be no net zero policy without nuclear energy at its core. And this is something that is certainly going to be part of the government's plan. I believe very shortly now they're going to announce their plans. And they are definitely putting nuclear power at the heart of their plan to reach net zero by the middle of the century. Now, we currently have 8 reactors that generate just over 1/5 of our electricity in the UK. All but one of those is in the process of being retired by 2035. Remember that 2035 date? That's when we have to get 78% of the way to net zero. And yet, one of the real engines of driving that, nuclear power, is going to all but disappear from Great Britain under current plans. So there has to be, apart from Hinkley Point C, there have to be more of these large atomic power stations. And they're also going to use something called SMRs, smaller modular reactors. Because the reality is, although obviously we can all name a couple of tragedies that have happened in the past, this lifestyle, a form of travel. When you look at energy, nuclear is safe. And all the problems that surrounded it, including waste disposal and everything, have long been solved. It's purely the throwback to, I suppose, all the way to the Second World War, I guess, that people have this fear of nuclear because obviously it was weaponized originally, but it is actually an amazing power source when it's harnessed with the right technology. And SMRs could well be the way forward. They've actually been in use for 60 years in things like submarines and aircraft carriers, and not blowing up every 5 minutes, even if you did watch that Vigil series recently, which was trying to imply something like that. And these are have quite a small footprint. You can build them on the sites of brownfield factories or other disused spaces. They don't have to have massive sites. They can even be underground, which would be far more preferable than all these monstrosities that we see littering the landscape these days. And of course, they're not weather dependent. It doesn't matter whether you have enough wind or whether the tide's flowing in the right direction or whether we have sunshine, a concept quite rare to those of us in Britain. But if you wanted a 440 megawatt small reactor, that would only need 25 acres of land, and that could power over 1 million homes. So you wouldn't need that many of these things scattered around the country. Rolls-Royce has been one of the providers over the last 60 years. They're working on a model that could be as part of the government. I personally think these are probably the secret sauce. This is where the magic happens. But again, the public is going to have to be won over to the idea of being a heavily nuclear dependent country. France, for example, has been nuclear for a long time. Germany's gone all kind of anti-nuclear and is going to have to really change its thinking if this is going to fly internationally. But this is definitely, as far as I can see, the only viable way forward. Now, the government, in looking at these larger sites, they're coming up with something called a regulated asset base funding model, which is a nice kind of nothing name, meaning you and I are going to pay for it. So basically what they want to do is incentivize the developers and the institutional investors to put money into these large long-term projects by providing a secure payback right from day one. And that payback effectively coming from our bills, things like this levy we talked about earlier. So they're going to start getting consumers to pay for these big atomic power stations ahead of time through subsidies and effectively transfer the risk from the developers to us, the customers, through those levies. It actually kind of creates a bit of a monopoly for companies in those areas, which is something that allegedly a government quango will keep an eye on. But, I suppose in a way, who cares? We just need power. And we used to, if you go back right through to Victorian times, you'll see buildings from water boards, water companies set up in the 1900s. We're just going back to that kind of regional power supply, but it's going to be based on nuclear power. And EDF, the French company, is using this RAB model to fund their 3.2 gigawatt plant at Sizewell in Suffolk. So there's precedent for this, but also, as you know, these public-private partnerships have got a very checkered history. So how much we pay, do we overpay? These projects always take longer and seem to cost 3 times as much as originally forecast. Do we pick up the tab for all of that, and for how long? And of course, if we're going to get rid of 78% of our emissions by the middle of the next decade, we should be breaking ground on these things like tomorrow. And how many planning applications will go through? How much NIMBYism will there be? How many government inquiries will there be before these things get off the ground, let alone finished and generating electricity? This is a 20, 30, 40-year plan, and we're about 20, 30, 40 years late in getting it started. The National Grid is even talking about something called Energy Ireland. Now, no, this is not a new reality TV program where lots of people take their clothes off. This is actually being talked about with at least 2 other countries in Europe, where they're either going to find an island somewhere and watch out if it's near you, or they're going to make an island somewhere, and it'll be like some kind of energy hub in the middle of the North Sea with long pipelines going to the various countries, and it'll have everything on it from wind farms to hydrogen and battery storage and all sorts of other things. So watch out for talk of the Energy Island project. It is real. It's not a joke. And that is for massively by the middle of the next decade. So what can be done? Well, we've still got a ways to go in some of the basics here in the UK. Apparently, our homes lose heat up to 3 times faster than other European countries. So we've got to get better at insulation. Now, they've offered grants and things on insulation, but very little of it's actually been taken up. So, we do need to get, I suppose, to change people's psyche to understand that their heating bills include an awful lot of heat that's just going straight out the top of the house. So we do need to get better at keeping it in, and then we could turn the old clock down a few degrees and save some money. Now, this could actually be one of the benefits of really high heating bills. If people start treating energy as a really scarce resource because it's so frigging expensive, maybe that may make people want to preserve it better, and it may make sense then to invest in insulating a house. If you're going to take 20% off a 2,000 or 3,000 a year bill, then it's going to start to make financial sense to invest in things like insulation. As I've already pointed out, shamefully, we store just 2% of our gas demand compared to much higher figures in France, Germany, and Italy. We have got to build more gas storage. Not exactly, you'd have thought, rocket science given the dependence on Russia, but hey, this is where we are today. It hasn't been done. No government has seen fit in the last 20 or 30 years to increase our capability to store gas. Now, what kind of leadership is that? As the price of buying gas elsewhere goes up, then some of these projects start to look economic again. Although again, you got all the NIMBYism. Remember all the response to fracking and earthquakes and all the rest of it. So that's not necessarily going to be easy. We can buy more liquid natural gas from the likes of Norway, Algeria, Qatar, and America. At least let's increase the range of suppliers we've got. Otherwise we're going to be totally relying on this Russian pipeline. I suppose we could build more wind farms if you want some more of those nice big propellers murdering the birds near you. This thing about replacing gas boilers with heat pumps now looks like becoming law by 2030 or 2035. There'll be subsidies. The government's hoping the prices will come down over time. But hey, the bottom line from all this, I think, if we're going to reduce our emissions by 78% by the middle of the next decade, I think the only way is that we're going to have to live more frugal lives. We're going to have to consume less, spend less, use less energy, drive less, go abroad less, heat our homes less, buy stuff in supermarkets less. All I can see is a shrinking of our lives and our economy, which should have massive impacts elsewhere. I mean, everything we talk about is about how to invest, how to grow wealth, how to protect wealth. Here we are now talking about how to basically shrink every aspect of our lives in order to meet that emissions target. So this could become very painful for a lot of people. And obviously governments and politicians don't really like sharing that message. Now, I want to close really this report with a series of statements from a real expert on the industry, Philip Lambert, who runs Energy. He's kind of a consultant to the energy industry, and a lot of this I took from a very interesting article from the Financial Times. Firstly, this is a chart he produced of the emissions from fossil fuels in the UK, and as you can see, they've each had their peak, whether that's coal in the grey, oil in the green, or gas in the red. And then they have been declining from that peak. In the case of coal, declining from really the early post-war period in the 50s, oil declining from the oil crisis period of the 1970s, and then gas declining really from the turn of this millennium as we try to use more renewables. There are actually some things you can barely see on the diagram that include things like basically renewables and non-hydrocarbons. But his point is that until about 2016, we actually had a really good decarbonization strategy, and it was working well, as you can see. Reduction in oil use, the significant reduction in gas use as we got to the middle of the last decade. But what he's saying is that renewables are intermittent. You can't rely on them to be always there. So they cannot be the sole provider to meet our energy demand. And what he said is until 5 years ago, UK government policy recognized this need for natural gas as a transitional fuel on the journey to 100% renewables. But once this net zero ideology became entrenched, the natural gas sector was starved of investment. I showed you that chart, leaving Britain in its most precarious energy state since the oil crisis of the 1970s, which I remember well. And one of the fallouts from that was, gas guzzling cars couldn't be given away. This is when things like, Jensen Interceptor V8s, you could buy them for next to nothing. Nobody wanted them. Cars that did 9 miles to the gallon, where petrol prices were doubling and tripling, were not very popular. We're back to that kind of situation. And of course, 3-day weeks and all the rest of it. Now, the International Energy Agency, in his view, has rejected energy literacy by calling for a ban on the exploration for oil, gas, and coal. So they've come out and said, because of this groupthink, because everyone wants to go green and ESG, let's not spend any more money investing in exploration of fossil fuels. It sounds lovely. Doesn't it sound like a great thing to say? You can imagine them cheering at the conferences when they say things like that. But the reality is we need it. We need these fossil fuels as part of the transition, and they are showing their own ignorance by not accepting that. So he's saying that renewables are intermittent, and that's a repeat of the same slide, so I shan't bother showing you that. He's saying that the coal industry only needs $50 to $100 billion per annum to maintain its current level of production. Natural gas needs more like $250 to $300 billion of new investment just to maintain current production levels. And remember what the IEA themselves said, that we're needing more, between 2 and 4% more gas each year. But they want to starve us of the investment in exploration that will generate even the current levels of gas supply. 45% of the IEA's emission reduction target by 2015 is using technologies that are still in the prototype and demonstration stage. So the grand goal of these emission targets by 2015 is assuming that things that are currently only just beyond the idea stage in prototype form will come good, will become economically viable, scalable, and available over the course of the next 30 years. And that's a huge assumption. There's no guarantee that that's going to happen. So he says that in the absence of a technological breakthrough in long duration, large scale battery storage, this symbiotic mix of mass renewables and mass gas-fired backup generation will be critical for national and regional power systems. Now that, this is like talking to turkeys about Christmas. The politicians just don't want to hear this message. And it's, I suppose, a real comment on where we've got to with freedom of speech in this country these days, that he's actually been nervous about going public with these statements for fear of being cancelled. I guess I don't want to hear the truth, and nor indeed do the IEA, who are supposed to be leading the charge on all this stuff. But he's a man after my own heart, actually, Philip is. And some of the things he says, I think, need to be said. So let me just quote some of them. State-led, polarizing, fear-based propaganda campaigns, where have we seen those recently? banana syndrome. And intolerance towards fossil fuel producing nations and companies may in future be fossil fuel consumers too. So, they may be actually shouting against the very people they need to rely on. Colossal intrusion by the state on ideological grounds into every area of economic activity will risk deep economic upheaval, which can create the risk of deep impoverishment and misery for billions of people, and unforeseen consequences for the fragile global geopolitical system, which has somehow given us nearly 80 years of unprecedented peace between the major tribal blocs in our world, partly as a result of unprecedented aviation-led mobility between different peoples. So the world's become a smaller place. As you travel more, I don't know about you, I've always found that some of the most traveled people are also some of the most cultured and sophisticated people, some of the broadest thinkers, some of the most tolerant people. And that's, he feels, has contributed to us having 80 years of world peace, because we actually get to visit other countries, other continents, and realize that we've got more in common than we have that divides us. So, I think there's an awful lot of strength and power in what he's saying here. But, when a man like him feels almost afraid to say it, what a damning indictment of our society. So what about hydrogen? As we come towards the end of this broadcast, I appreciate we're covering a lot of ground here, but this is a big So again, we have a target, 5 gigawatts of gas this decade, which would be enough to power 1.5 million homes. But it's going to take billions in subsidies from taxpayers and consumers, who are also taxpayers, to make this happen. They're going to target the heavy industries like chemicals, oil refineries, steel, cement, shipping, transportation. But of course, it's never that simple. There's at least 3 different types of hydrogen. There's blue hydrogen that comes from natural gas. There's green hydrogen, good choice of color, of course, because that comes from renewable electricity. And then there's gray hydrogen, which of course is bad because that comes from gas or coal. So 35% of UK energy to be driven by hydrogen by 2050 is one of the targets. And of course, blue and grey hydrogen production need those pesky fossil fuels again. So you see, you just can't get away from them. So eventually, when we can have sustainable, renewable energy and it can all be green, we can wave goodbye to grey and even blue hydrogen. But in the transition period, we can't. And what we're doing at the moment is closing down all of this research and investigation to discover new sources and the use of these fossil fuels too quickly. And it's actually going to stunt the move to renewables. And going to awful lot of you can mean for investors. I tell you, where there's muck, there's brass. I think there's certainly going to be money to be made from the fossil fuel industry as these prices soar over the next few years, particularly perhaps in the kind of service providers, the picks and shovels providers to the oil and gas and coal industries. You can find these companies quite easily. They've actually, most of them, been bombed out by the recent event. So there's probably some bargains to be had there if you are in the mood for a flutter. There's definitely a future in the short and medium term for these companies. Obviously, you've got to keep an eye on the transitioning to ESG, which will eventually see their demise. But in the meantime, there's probably some big growth to be had out of these companies that are servicing and supporting the people who are actually producing the oil, the gas, and the coal. I think you have to develop a little bit of a cynical mindset towards some of the what I've called ESG BS, because a lot of companies are just greenwashing themselves. They're trying to make themselves look, like they can get a tick in the box. A lot of trustees, a lot of investment managers are making this worse because, I think no one's going to get fired for choosing ESG, just like the old IBM days. It doesn't necessarily mean it's the right thing for you. So you've got to make sure that you are aware of what you're invested in, whether it's in your pension, your ISA. What are they putting you into? Is it all based on ESG BS? And are you actually going to get a return from it? Or is it time to diversify into something else? if you are in the fossil fuel sector, including quite a bit of M&A activity, exciting new renewable energy companies and some great new technologies. What I suspect we'll see there is a bit like we've seen with the Googles and Facebooks. As a company develops a new technology that's obviously working, I think they'll be bought up by the bigger players that want a fast track to that capability. So again, some of them will be private equity and unlisted companies, but if you can get into them before they list, you might find there's some very juicy rewards when they get acquired and bought up by the bigger players. If you are going into the public companies, it's always hard to pick individual winners, so it's probably best to diversify, maybe to look for exchange-traded funds in the support services sector for those industries, and maybe just spread the love and spread the risk a bit. But there's definitely big investment opportunities on both, I would say, the upside and risks on the downside for this transitional phase between fossil fuel dependence and the entire renewable brave new future of the 2030s to the 2050s. So you're going to have to be, I think, more aware than ever of what you're investing in, for what reasons, what returns you're getting, and where those companies are performing, not just in an ESG sense, but in things like profit, dividends, and return to shareholders. So in conclusion, UK energy policy is being dictated by what you could describe as net zero bigots who, as the industry experts are telling us, are ignoring the fundamentals of how you manage this transition from fossil fuels to renewables. The impact of some of this, as we're already seeing, is going to be a big acceleration in fuel poverty. I think that could stoke social unrest. It could be the last straw that breaks the camel's back after lots of other price rises. All we need now is a winter of discontent with perhaps people striking for more pay because of the prices going up in the shops, cold weather meaning more energy consumption at higher prices. This is not exactly the recipe for a nice, calm, smooth winter. I do think fossil fuel providers will prosper in the medium term as they take up the slack from these unreliable renewables. But we're also, what on earth is going to be said at COP26? There's bound to be some posturing. It wouldn't surprise me if there's some new green levies and taxes announced there. They all slap each other's backs and say what a great job they're doing. But the bottom line is, at the moment, we're simply going to become more dependent on countries like Russia and more vulnerable to geopolitical pressure. And are we going to see other countries making as much of a commitment as we are? Initially, we've got to keep the lights on, we've got to keep the open, we've got to keep the rioting off the streets. So perhaps we need to do a bit more on the investment in the fossil fuels side as part of moving forward in this great transition. So that, I hope, has been helpful. We've covered a lot of ground there. You might want to rewatch bits of it just to fill in the gaps, but I hope you found that useful, and I look forward to seeing you again on another Renegade Investor Report. Thanks for watching.